Okay, welcome everyone. We'll start our new unit, which we are going to start is assurance, audit and assurance. My name is Anjum Satar and my email address anjum@ukversity.co.uk. If you have any question, please drop me email. And today lesson will go through LO1, Learning Outcome 1, which is about understand the concept of assurance. So why assurance is important and what is the purpose of assurance. Always whatever we prepare in accounts or the financial statement, those need to be two keywords. Those need to be true and fair. Those we have to be follow the standards, accounting principles, and those should be true and fair, so our audience, our user can make the right decisions uh, based on true and fair information. So auditor give the assurance the information contained within a financial state with within a financial statement. Those should be true and fair. So if those are not correct, of course there can be. So a couple of us we heard about Enron. Do we know Enron? What's happened with Enron?
No.
We don't know about Enron. Okay. Enron, and the second company was, if I'm right, is World Telecom. World Telecom. That's these two American companies. They showed the profit after audit millions, but after a few months they not were not in a position to pay the salaries to their workers to meet the legal obligations. So ultimately collapse, these companies. So we heard about the word creative accounting. Do we know what is meant by creative accounting?
It's where you manipulate figures to reach a certain end, which isn't necessarily true.
Brilliant. So that's, so these Enron, World Telecom, are more focused on the creative accounting. So under an stated income and expenses and assets and liabilities and our financial statement, our figures look good. So ultimately what's happened, in the real sense, the company wasn't worth of that. And due to this reason, the shareholder lost in millions. So we need to be, that's why is assurance is very important. But lot of things happening. Maybe we heard about last week, even KPMG's, they released the reports about the companies. A lot of things carry on happening, like Carillion construction companies, their pension fund shortfall, and the Tesco in the past, manipulated sales turnover, which was, which was 180 million, and they shown 220 million approximate. So we need to be think about, and assurance need to be. But why we not still getting true and fair information? Of course, these companies' account was audited. What do you think? What was the reason? Is it audit was not appropriate?
Yeah, audit is not done properly, I think, or maybe they have something behind.
Something is behind, because is ethics, moral principle, and lot of, it's not really true reflections. And who pay the fees to auditors? End of the day, company pay, and they work in the best interest of the company. Okay, so
Maybe
within this unit, we look all these issues and we look, how we can conduct proper audit. Yes, please.
No, it's fine.
Sorry,
It's okay. It's okay.
sorry, I not get. Maybe a bit, Okay, so the unit aim to provide the learner with an understanding the concept of assurance. Learner will be considered the responsibility, different stakeholders. Do we know what is meant by stakeholders?
Related parties like it could be management, it could be staff, it could be suppliers, creditors, debtors, bank.
Okay, good. So anybody who has any interest in the business is a stakeholder. Their stake, their interest will be influenced due to the action or decision of the company. So that's why we need to be, it's our responsibility to consider and meet their expectation. So we need a assurance engagement, will gain understanding internal control systems, which will discuss how we can, and practical understanding how get the required evidence. Evidence is very important in audit and to record, and we have available those evidence. So what we think, current knowledge, have you involved in audit? So scale 1 to 10, how much we know about audit and assurance? What do you think? Always good to be reflect.
Mine's probably about a 5.
5. Okay, good.
Yeah, 5, 6.
5, 6. Okay. So today, indicative content, what we supposed to be focused on the keywords, like concept of assurance, user of assurance, report both internal and external, scope, limitation, nature and purpose, assurance techniques, strategies, risk assessment. These words will carry on using throughout, our lessons, because assurance word is almost everywhere in our lessons will use. So planning assurance engagement evidence, how we can source them, how we can draw the conclusion and recommendation and reports. So what is assurance engagement? So an assurance engagement in which practitioner, which is accountant, express and a conclusion designed to enhance the degree of confidence. So if you have assurance from independent audit, so we can rely on it because it's an independent audit. So audit means to check the accuracy in the book of account. Those are prepared according with international accounting standard, reporting standard, and then of course user interest, their confidence will be increased, on the about the company and their account. So intended user, other than the responsible party about the outcome, evaluation or the measurement of the subject matter against the criteria. So assurance give. So who is the practitioner here in audit? Auditors. Intended user can be owners, shareholders, and even stakeholders. Responsible parties, manager, directors. And subject matter on the opinion is a given about the financial statement, criteria, accounting standard, and legal requirements. So in case of audit, definition work in practice like this. So assurance can be two types of assurance, can be reasonable assurance, is the high level of assurance, but not obsolete. Yes, we can say these statements tell us true and fair according with whatever we check. Yes, but we can't say absolute assurance because we are finding maybe 20% sample. We are looking how we can unearth, really we can give the full assurance is everything 100% correct. Yes, so we can never give the absolute assurance. So limited assurance is a low level of assurance, that the reasonable assurance which state negatively. So an auditor can never give the absolute assurance because inherent limitation of audit. So subject judgments by the director. Director may not give all the information to auditor. We only realize whatever the information was provided to us, were provided to us. So we need to be think about sampling. So evidence is persuasive or not conclusive can be. So that's we need to be think about. Any question, please, if you have?
So what is the difference between assurance and then audit?
Audit itself is assurance. Auditor give the assurance, yes?
So that means audit is independent examination of,
Yes.
of the financial statement.
Yes. So
And
when
assurance
you
giving the assurance of the information. This is the correct.
yes. So when you examine the book, you're giving assurance these were prepared on the double entry bookkeeping. These were prepared under IS1. These were follow the reporting standards, yes?
Mhm.
And all the rules and the procedures were correct. And then you're looking the materiality, all the material information included within the financial statements. Yes, that is a crucial thing.
Okay.
And two types of assurance: reasonable assurance, limited assurance. We never give the absolute assurance. Okay, so an assurance engagement is engagement in which the practitioner express a conclusion designed to enhance the degree of confidence. So if you have give the assurance, the degree of confidence will be higher. Intended user other than the responsible party about the outcome of evaluation measurement subject matter against the criteria, which is International Audit and Assurance Standard Board Handbook according to International Audit Standards. So what are the assurance engagement? Reasonable assurance, limited assurance can be statutory audit, which is required by law, and free from material misstatement. Free from material misstatements. Yes, not
Yeah.
off the balance sheet. It should be everything on the balance sheet. Yes, those are the materiality. We learn about materiality. Do we know what is meant by materiality concept?
It means it's actually like enough to be relevant rather than something immaterial would be like a really small transaction, but material is actually relevant.
Excellent. So materiality means significant. So any information which is a significant should be like, if it's a 10 million worth of company and there are the £5 shortage, which we not showed in the financial statement, that £5 not really influence on anyone. Yes. So because all the material information there, only £5 were missing that transaction. So if £5 carry on missing, it can be become a material. So we need to be make sure at least the material information is there. So make confident decision knowing about the risk of information being incorrect. So we need to give the assurance everything is followed by standard. Okay. The element of an insurance engagement, there are the 5 elements. The 3 party involved, which is the practitioner, the reviewer of the information, the intended user, the responsible party, the subject matter, and suitable criteria against the judge, reality and accuracy, and sufficient appropriate evidence we need to, and written reports we have to be produced at that. So assurance will help to reduce the risk, increase the confidence. Any question, please? If you have, you carry on asking. So next example of buying a house. So we'll go through this example. Consider someone who is buying a house. Most of the members of public lack of the technical expertise to assess the structural condition of the property. So what we do? Therefore, a risk of someone pay a large sum of money to purchase unsafe property, which need to be further expenditures to make it usable. So to reduce this risk, it is normally the house buyer, the user, to pay a property surveyor, the practitioner, to perform a structural assessment of the house. So the subject matter, the surveyor would then report back to the written report to the house buyer and identify any structural deficiencies and measure against the suitable structure criteria. With this information, the potential buyer can then make their decision to buy or not buy with the confidence, and they know what the structural condition is. So what they're giving, basically they're giving the report, and that will help us to increase our confidence, and on the basis of this we can make the decision either to buy or not buy the property. Okay. So the development of assurance engagement in corporation, which is mean company, separation of ownership and control. Who is the owner of the company in the company? Who own the company?
Shareholder.
Shareholders. So what about director? Is it that? So who select the directors?
They run the business on behalf of the shareholders.
They run the business on the behalf of the shareholders.
Yeah.
So director need to work in the best interest of
company,
shareholders. Yes.
shareholder. Mhm.
But we heard about good few time Barclay Bank, for suppose, back in 2015, Barclay Bank not earned a single penny profit, but the CEO of the company got millions in bonus. Even the Barclay Bank not earned the penny profit. Yes. So what is? They have to work in the best interest of the shareholder, but actually sometimes they are working best interest of
Direct
themselves.
themselves.
So, so we need to be, there should be a remuneration committee decide so we can separate our separation of ownership and control. Yes, if we don't do it, then the business can operate through the number of different vehicles, and it's a common for the investor in the business to seek protections. Yes, limited company status, and this means we always, if we don't do it, we lose the money, which is happening in the various occasions. Like recently, Crillian's company construction 75 million shortfalls. Incorporation has the following implication: the creation of the legal distinction between owner and the business. So that's why is lot of we heard about corporate governance. See how the company will govern. Actually, that's why we need a board. In the board of governance with representation of employees, not just few people govern and they work according to their interests. Okay, so Alved, who's the stewardship? Have we heard about this word before?
Mm,
This is like somebody who looks after, almost caring for.
Excellent. So someone else, care your things. Yes. So like auditors, yeah, accountant, director, they are actually not the owner. Shareholders are the owner. They are steward. They have to work in the best interest of the shareholders, for the shareholders really. So we need to be look around. Then conflict. We need to be make sure we'll try to be minimize conflict. Not really the information which contained in the financial statement. Those should be true and fair. So a detail here is always is a problem because the fees. Who pays the fees to a detail? Who pays the money to them? Who pay the fees?
company. Or
Company pay them. Yes.
mhm.
So if company, let's say, like accountant get the fees from clients, yes.
Mhm.
So if the client pay you, what you do? You will work in the best interest of the client, or you will work best interest of the HMRC.
Of course, is on behalf of the, or the best interest of the sorry, is client.
Best interest of the client, yes.
Otherwise, they will lose the audit. They will lose the client.
Yes, that's the question mark. Yes, you will lose the. We have a fear about we'll lose the clients. Yes.
Mhm.
So what is about then assurance? Are we giving positive assurance, obsolete assurance, reasonable assurance? Are we giving limited assurance?
This is the fact here.
That's the point. Actually, is happening in all the audit words. Yeah, audit world. So we need to be assurance. Yes, because these big firm KPMGs, yes, like Starbucks and various other big companies, like Facebook, £4,000 tax a year, when on 75 million pound worth of. So why the £4,000 tax? Yes. So we need to. It's all about. That's why the audit is becoming a question mark. A lot of new standards carry on coming. How internal control will be, independencies. Yes. So stewardship is the responsibility of the good care of resources. A steward is a person, so trusted with the management and other person. So we need to be make sure those and they have a relationship. We use the words fiduciary relationship, the duty of care. So that term we use, they have a duty of care. So the steward is accountable. So in case of Enron, the audit company was really, why they not pick it? Because there are the lot of course we can miss it in audit 1 or 2 points, but we can't miss it everything. We giving assurance. So due to the trust as a detail, it dropped significant after these incidents. So that's we need to be look around in audit how we can increase if you work in audit. Yeah. The fiduciary relationship is the responsibility of the good faith, such as the between the director of the company and the shareholders. And there is a separation of the ownership control. We need to be must work in the best interest of whoever the owner or the stakeholders. Overall, accountability. Yes, people in the position, power can be held accountable. So what's happened accountable? So what's going to be happen? The directors of the Tesco's, those manipulate the profit. It can be charged to criminal, but the while it's not been still finalized. Lot of investigation going around. So we need to be look around how we can corporate governance, different tier systems, different people. What is agency theory? Have you learned about ever agency theory? Who is the
No, I
agent?
haven't.
There should be agent. Who is the agent? Editors. Who is the principal? Yes. Shareholders? Yes. Stewardship relationship. So all come. So one party, the principal, imply another party, the agent, to perform the task on their behalf. So that's we need to be in when we do audit. We need to keep in mind the concept of agency. So which we'll go through. Audit engagement. Okay. So we learn about ethics. 5 professional code of ethics. Do we know what those are? 5. It's your own observation. Some people in our organization very popular. Yes. Those are chat a lot. Yes. Always chatting. People know them. So we can remember the word these professional code of ethics, which auditors need to follow because they are member of awarding bodies. And it's a popular people chat in office. So what is a PPCIO? P is a popular, P is a people, C is the chat, I is in, and O is office. So to remember easily these 5 professional code of ethics, you can say popular people chat in office. So what first P stand for? Professional behavior. Always the detail need to be follow the professional behavior, not conflicting things. Yes, always work in the best interest of the shareholders and the wider stakeholders. Professionally competence and due care. Do we know what is meant by this?
It's taking on tasks that you can do and doing them to a good standard, and not taking on tasks that you don't know how to do.
Excellent. So what is the difference between competencies and capabilities?
So competence is like you can do something well, whereas capable, like for example, I might be able to bake a cake and that I'm capable of that, but I probably couldn't bake a very nice cake. And if I could bake a nice cake, then that would mean I was competent in it.
Excellent, great. Well done. So capable is ability to do something and competency is due the perfection without any errors. Yes, so that's why is we need to be do CPD every year. Yes, continuous professional development, continuous working towards competency. That's why the company use the method STAR method of interview, which is competency based interview. They ask you the question about situation, task, action, and result. So giving and assessing your competencies against each role. So professional competencies, the data need these competencies to identify what is happening in actual industry, what is happening in the past, what are the new standards. Okay. Confidentiality. What do you think? A data need to be confidential?
Or you don't need to make a confidential of the information.
Yes, but if we know, is it confidentiality mean we don't need to declare even the company doing the wrong thing?
Mm-hmm.
What do you think? Do we need to? Because Our client is the company. We work for the company, yes, to do audit.
Yeah.
So we do audit for them, and we found director draw the £200,000 for personal use, yes. So what do you think? Do we need to declare it
They should not declare.
in our report?
Yeah.
So it means, and director don't want to declare it. What do you think?
So
I'm
if
going.
you, sorry.
No, that's fine. Yes, please.
So if you need to keep the information confidential, but if there is a duty to declare, then you can still declare it. Like if they've done something illegal, like you have to like declare it to authorities, or you still need to like keep it confidential in the way that you don't tell unrelated parties. But if there's a duty of care to tell somebody because of something that's been done illegally, then you have to do that.
Excellent. That's, so it's a duty of care about the society, wider interest of the public. Any rules, anything, we always need to think about the wider interest of the public or audience. Yes, who is the owner? So it's not the director is owner of the company. So we need to be work in the best interest of the shareholders, and the wider interest of the public is happening. We should declare in our reports. That's we're not going to break the confidentiality laws then. Okay, what about integrity? How much integrity we have, or we need to be? What do you think? What is integrity is meant by?
So that means auditor need to be honest and straightforward in all professional and business relationship work tasks.
Yes, so integrity we need to be. What in that case in Enron and various others, that's a question mark. How honest they were, auditor. Yes, how well they have, because honesty is end of the day you're telling the true story. We need to be true and fair. Okay, that's other question mark. And objectivity. What is meant by objectivity?
That means judgment must not be compromised. That means it should be the proper judgment, not be bias or conflict or interest, undue influence.
Okay, great. So that's, other is coming, the lot of, can't be brother is a director and a details is working for the brother company. Yes, there can be bias, or as the investment in that company bought the shares and doing the audit as well. Okay, which company need to do audit? Is it every company need to do audit when we submit accounts? Are there any limit? What do you think?
Every limited company, I think, listed company is need to be audit. That means public limited. They have to be.
Yes, any company turnover is more than 250 and more than 50 employees, yes, and the worth of assets, certain limits. So that's we need to be must, audit to submit the account. Okay, so that's, then details can be internal, external, always true and fair, ethical standard, which is set by international accounting, International Federation of Accountants. They set that ethical standards, and all professional bodies need to follow. Audit standard, which ISAs, always we need to be follow in audit, and professional skepticism recognize, these financial statement being audited may be materially misstated, so we need to be make sure we not and will fully, follow the steps as a editor. So International Accounting Standard Board, we have Audit Standard Board, Assurance framework to engagement, permit two types of assurance engagement, which we said earlier: reasonable and limited. Sufficient appropriate evidence, we need to draw the conclusion. All material respect within the identified suitable criteria and give the positive word assurance opinion. So thus we need to three types parties involved, which we earlier said as well. So management, shareholder, the user, and the
auditor or practitioner.
person. So that's, and key focus is true and fair. The fair representation is of exploited, but basically means, the financial statement are reasonable, accurate, and prepared in accordance with the law and regulation. Unbiased, clear, and that's why we need to be follow professional code of ethics. Okay, so secretary audit, which is required by law, the company, those have certain which is listed in the stock exchange. We need to submit, audit accounts, and that is crucial. Details should be carry on up to date information about. That's why the professional code of ethics is a legal requirement. You have to submit your CPDs. Because limitation and audit means it is not the possible to provide the absolute assurance. Of course, there is a limitation. Financial statement includes subjective judgmental matters, inherent limitation, control used as the audit evidence, representation from the management may have relied upon the one source evidence. We need to be think about evidence is often persuasive, not conclusive. Auditors sometimes, the figures giving look good really. Don't review 100%. Of course, if the cost involved and the company don't want to, they just want to be legal requirement to fulfill. Okay, some user incorrect belief that the audit does provide the absolute assurance. No, it's not. So there can be expectation gaps. For example, misconception include believe auditors test 100% of the transaction. No, they can't. Yes, there can be a fraud. Auditor is a reasonable preparing the financial statement. The responsibility of management. Limited assurance engagement. Engagement. So gather sufficient appropriate evidence to able to draw the limited conclusion. Conclude subject matters and respect, identify the suitable criteria, which we look some examples in following lessons. Okay, so what we need to look around the review engagement, voluntary, analytical procedure, and make inquiries. Negative if it's the report, we need to example a limited assurance assignment is review engagement. It is possible for the small companies who are not legally required to full audit, who have to review the financial statement to enable them to present their account to the potential lenders. Yes, sometimes lender asks you the audit accounts. The data need to be signed off. No precise here what is meant by the reasonable or the limited in the context. However, is clear the confidence is inspired by the reasonable assurance report design to be the greater than the inspired by the limited one. So that's, we need to look around. Sometimes they carry on, but we need to follow the rules and regulation and the audit standard. Objective of review financial statement. What is the objective, especially of audit? Why we do is audit standard also provide the guidance, but a main purpose to provide the true and fair. And this is and always, do we know what is meant by going concern? What is meant by going concern? Auditors give the view about the going concern. Do we know what is meant by going concern itself?
It's it means that the company is financially stable and it's still actively trading.
Excellent. So company is financially strong, and we expect based on our audit the company will carry on its operation at this level of activity at least for 12 months. Yes, they give the assurance based on. So what is the assurance engagement? Reasonable assurance, three parties, matters, evidence, secretary requirement. That's all we need to look around. So we'll do some, yes, expectation gaps. We need to look around. Is there any? Okay, then we have, when we look, the professional standards always in the UK Financial Reporting Council, FRC standard, we need to be international standard of quality control, international standard of auditing, ethical standard, practice notes, and all these, we have to follow. International Audit Assurance Board, it set international standards on audits. We have a lot of standards about audit, not just accounts to be prepared, how to do audit. So which will go through some standard. Always the detail is three things that exist successful. We need to be a detail. Sometimes can be fail, and consequences can be damages paid out, bad publicity that's happening. Understand the company, big audit firm. In case of Enron, the bad publicity, yes. So duty of care they have, negligence in the situation with the duty of care state. So that's we need to be damages can be. So we need a liability restrictions can be in place, but we need to be make sure as a details to be try our best. So okay, always they have a contract between one and other party, duty of care. Okay, professional skepticism, what is about an attitude of critical assessment and use the questioning mind necessary to prevent overlooking suspicious circumstances or from the drawing incorrect conclusion. So a auditor should neither assume that the management is dishonest. Can we assume it? No, all the managers are. No, we shouldn't. Yes, and fail to question whether they are honest. This means the attitude that include being alert to condition may indicate the possible misstatement due to the error or fraud. It can be error and it can be lead to fraud. So what is the difference between, is it a fraud? What is the key difference between error and fraud? We know all, yes?
Fraud is intentionally you doing this mistake, and error is unintentionally.
Yes, so fraud is also, we have a Fraud Act 2006, and somebody can be charged against fraud. So ethical standard independency, auditors are to give an initial opinion, and it is therefore important they are independent. So we have ATHE and ACCA and various other professional bodies, and these ethics being set up, and every members need to be followed. So ethics standard independencies, we need to be look around the threat. Auditors, that's we need to be minimize self-interest. What is the self-interest? Like if you have an investment, if you have a close relationship, back-ended you're getting the commission, intimidation, familiarities, we know. That's why, after 5 years, audit the client, if you're doing same client audit, you need to be changed. Even some industry, 2 years. You can't do audit of same client more than 2 years. You need to be send other person. Maybe it's from your own firm as well. So the same, because become your close relationship with them. Thread of member in practice, professional appointment, second opinion, fees, remuneration. Can we charge contingent fees? Do we know what is meant by contingent? Anyone? We heard. Can we charge other details or account and contingent fees? Of course, we charge the fees for our service, yes, which we provide. What do we think? Can we or we can't?
I think we can. We're providing the service, so.
Can we say, I'll save you, whatever I'll save you in tax, yes? Pay me 50% of that money. If I'll save you £2,000 tax, you pay me £1,000 fees. If I'll save you £5,000 tax, you pay me £2,500. What do you think?
We definitely can't say that, because then we'd have an interest in them saving more tax. So it'd be like a self-interest threat, wouldn't it?
Yes, well done. So we can't really do. We can't do percentage of the tax. We can't do percentage of the opinion we'll give. Yes. So we as auditor, we can't, either accountant or auditors, we can't. We just do the fees. We'll say the time we'll spend it, we'll charge you per hour rate. Yes, but we can't relate it to tax. Okay, so that's wrong, which is safeguard apply firm wide. We always need to monitor disciplinary mechanism, what is, who is responsible for what, file, transactional records, or software control systems. If you have a third party server you're using, always look around. Auditors give, what do you think? Have you maybe read, NI? Yes? National Insurance.
Insurance.
Fake workers, yes? The person is not anymore in this world, still in the payroll, yes?
Mm-hmm.
So these are the lot of frauds carry on happening. So always a detail questioning mind why. Yes, where is the audit? The tax being paid. So you can cross check from HMRC as well. Ethical standards which we earlier discussed, that we need to be make sure we follow, and authorized disclosures by law. Okay. What is the internal audit? Internal and external audit. Is there any difference?
External audit is the audit firm, professional accountant. They do the audit, and internal audit is by the staff of the company.
Yes, internal audit you can set within a company, or you can, yes, that's internal audit. You carry on doing to rectify the things. Yes.
Hmm.
So external audit, which is by law you have to do, that's a statutory audit, which is once a year you have to do external audit. You can do other than that as well, which is not, but main thing, the independent, no conflict, because if I'm one department, I know each other's, other department, my colleagues, so maybe it not be independent opinion. So that's why it's external audit is also both have advantages and disadvantages. But external auditors can rely on the internal audit reports as well. So internal audit planning, internal system of control, audit evidence, audit completion, and audit reports are very important when we involve in the audit. So we have a ISA, which is International Standard of Audit Assurance 330, the audit responses to assess the risk. So which will go through different types of the risk, can be risk business. Let's say, when we dealing with the cash. Yes? What do you think? What we do, we pay wages through cash? We do cash business? What sort of the risk there? There are plenty of risk, yes? Still some people like cash business. So we need to be look around. So when we do audit, we need to be look around the firm now, and we need to be risk-based audit, based on there can be problems, yes? So timing extent or the based and the responsible to assess the risk of the material misstatement, something materially. So in a sense of the audit has obtained the audit evidence sufficient to enable them to offer a reasonable assurance that the financial statement free from the material, therefore the selection and application of the procedure design the vital important. So auditors are required to obtain sufficient appropriate evidence. Sufficient evidence. So if you do 5%, 2% sample of transactions, yes, only at the top you're looking top 10 transaction or this amount of transaction you cross checking. So we need to look around. Computer assisted, yes, that's audit techniques we can use. Experts and use internal audit reports. Sometimes is a difficulty estimates. So we can estimate things. Okay, so risk responses of the risk assessment, overall responses. For the audit procedures, maybe we need to look around the test of control and substantive procedures, analytical procedures, and test different tests. Like if your purchase order, who raised it? Is it the same person who paying the invoice and the same person raising the purchase order? That can be. So we need to look around. Affect the reliability of the evidence and consider who generated it. Is it written down? Is it original document? And the third party evidence as well we can. So test of control, this has already dealt, which we'll go through in, of course, here is a chapter in slide mentioned. Two aspects of the design, the system capable preventing and detecting misstatement. Do we have a system to detect it? Do we have a vouchering numbers? Yes. So is there any system in place when we do audit? Operation of the systems exists, operate and properly in period. Role of control testing, the data assessment risk material misstatement include the expectation control are operating effectively and the auditor perform the test of control. Okay, substantial procedure, the auditor is seeking to substantiate the assertion made the auditor knowing as the financial statement assertion regarding the transaction and the events when that transaction happened. Account balances and disclosures. Class of transaction, non-current asset, current asset, yes, expenses. So we need occurrence, we need completeness, we need accuracy, cutoff, classification, and presentation. Those were correctly classified, correctly present, about account balances, related disclosures, contingent liabilities, yes, contingent assets, right and obligation. That's huge. Have you heard about IFRS 16? Anyone heard about IFRS 16?
Yeah, I think leased on International
Yes.
Financial Reporting System.
So that's right and obligation. Because asset is not owned by you, but you have an obligation about 5 years. Legal obligation, you have to pay it, yes? So that in the past we not used to show on the balance sheet. No, we need to show the asset, we need to create the correspondence liability as well. And then every year we need to be current liability or outstanding payment. And then we need to carry on paying off, from our asset, which is the cash. So that you need to be right and obligation and the complete and accuracy. Then the estimate, yes, sometime how much is the real value? We know IES2. What is IES2?
Inventory.
What is about?
Inventory in the inventory control system.
Yes, so inventory we need to look around. Is it being value or net realizable value or at cost? Yes. So we need to evidence about a session is obtained via following procedures which we can use the abbreviation. Analytical procedure, inquiry, external confirmation, inspection, our own observation. You go in the warehouse to observe it, recalculation and performance, and then you produce your reports. Any question, please? If you have, you can ask. Okay.
Can I ask you out of this when you finish the class?
Yes, we'll finish in a few minutes. Huh?
Okay.
Analytical procedure, the analysis relationship between items of the data and relevant information. Comparison, year by year's information, that we can look around. Reliable, relevant is available. Substantial procedures, which we'll go through, each like a transaction like sales, purchase, payrolls, and various others. The audit can be and which we'll go through. I'll give you the book to look around, sampling also help us, tolerable misstatements, which will look different sampling techniques. So the audit size, random, we can look around qualitative aspect of financial statements when we do audit and the computer, audit techniques, different audit softwares and test of data, that's it. I copied the link here. This is Kaplan books, which we can read from these. So you can copy and paste these links. Other than that, I'll give you the audit books will be available on Moodle. Yes, which we can use. So everything, we all have access on Moodle, yes?
Yeah.
Okay, so books will be available on Moodle as well. So this is one of audit and assurance notes, yeah, which normally in ACCA F8 exam we use. So you will see here assurance today. Yes, we are looking and we discuss about ethics as well. So a bit our discussion was internal control, but we'll touch all these during our following lessons as well. Then final reports and types of reports. So that's all today. And if you have any question, please you can ask. Drop me email. Go through. There will be this is open tuition handbook, and one other will be Kaplan as well. I will upload. So there will be a two. If you want to use them, background reading you can. And hope so. I'll speak to you during our next lesson next week when we'll go through LO2. Okay, and all the lessons will be available on Moodle as well. Thanks for listening. If you have a question, you can ask. If no question, that's fine.
Okay. I'll just ask regarding the assignment. The understand the nature and